About the UPS. It was founded in 1907 by Jim Casey in Seattle, Washington. It was first named as American Messenger Company. It was only in 1919 it gained the name United Parcel Service, today known as UPS. The company has grown massively throughout the years and today employs 440,000 employees. Its main competitors are FedEx, the United States Postal Service, and regional carriers throughout the cities of the US and over the world.
Delivery company in the world and also provides supply chain solution to its customer. The company delivers more than 15 million packages per day in more than 220 countries and territories in the world. This is shown in the graph of the competitors, where we have WOG and market cap in millions. In the graph, we can see that UPS is the leader in the market, followed by FedEx. We can also see United Parcel Service, J.B. Hunt Transport Service, Expeditors International of Washington, UTI Worldwide, Ford Air Corp, C.H. Robinson Worldwide, XPO Logistic, Hub Group Inc., and other competitors in the market that are all behind UPS.
UPS is known for its bound trucks and uniforms with the company's logo on it. In order to run their activities and deliver packages all over the world, UPS operates in its own airline and air cargo services. UPS Worldport is located in Louisville, Kentucky, as a location strategy due to its being 2-hour plane ride from 75% of the whole United States. Massive investments in technology such as NASA light control centers were made in order to obtain knowledge of sky traffic.
Its client segments, it's composed by 63% of U.S. domestic packages, 20% of international package, and 17% of supply chain and freight.
Collection. The group thought that our best data collection would be posed on total revenue, total assets, equity value, net income, and gross profit. Within the years, we may observe that 2016 was a high year, both on revenues and assets, and even in gross profit. Cost of capital. In class, we learned it as the variable WACC. Companies strive to reach an optimal debt ratio in order to reduce its cost of capital. A lower cost of capital will result in a higher value of the firm and a higher return on investment for shareholders. We would like to start our data analysis by operating margin. The operating margin will indicate the percentage proportion of what the company's revenue is left over after all costs of production are paid. By the years, we observed that 2015 had the bigger operating margin among the UPS collection. Among the operating margin, the return on asset is a very valuable indicator. It shows how profitable a company is in relation to its total assets. We may see that 2015 is also the bigger year among the UPS collection. Return on equity. It indicates the percentage return a shareholder receives in accountable value. We may see that 2016 has been a great year for the shareholders. The return on equity will reveal how much profit a company generates with the money shareholders have invested. Return on capital is a ratio that measures the return contributed for each capital contributor. In 2015, we may see the high return on capital. But as calculated, the return on invested capital, it is a ratio that indicates the return of an investment. It must be compared to the cost of capital, WACC, in order to see if shareholders received their expected return. Over the years, the biggest return on invested capital is 2016, and it is higher than the WACC of the year, which means that shareholders are happy with its return.
In this chart, we can see the current ratio and the quick ratio of UPS. These liquidity ratios shows the company's ability to pay its short-term liabilities by liquidating their assets. The quick ratio shows us the liquidity disconsidering inventory, because other assets such as market securities and even cash, they are quicker sources of cash to pay short-term liabilities. UPS is decreasing its liquidity ratios over time, what might be a problem in the future. With this data, we can conclude that they are still able to pay their short-term liabilities, however they have a lower margin for mistakes. Regarding working capital analysis, first we can see the days of sales outstanding graph. Here we can see how many days in average it takes to collect revenue after sale has been made by UPS. We can notice that in the past 3 years, this rate has been increasing in a constant rate, what means that UPS is taking more time to get money after they perform their services. For a company that provides services such as UPS, it doesn't make sense to talk about inventory turnover once they don't need inventory to perform their activities. This other graph shows us the accounts payable turnover, that is, the ratio that measures the rate at which a company pays off its suppliers. In UPS case, these numbers are always around 17. Combining the information of both ratios, the days of sales outstanding and the accounts payable turnover, we can see that for UPS, they pay their accounts before they receive the revenues from their sales. The free cash flow is a measure of the company's financial performance. It represents the cash that the company is able to generate after spending money required to maintain its assets. UPS had a huge increase in 2015 in its free cash flow when compared to the year before ended in 2016. This showed a good performance of the company that year, but in 2016 the performance of the company went back to the average. This suggests that 2015 was a good year for the company, but such increase in performance shouldn't be taken as a pattern of behavior of the company.
Considering the main ratios, EBITDA margin, return on assets, and return on invested capital, 2015 also performs better, with a return on assets of almost 15 and a return on invested capital of almost 40%. On S&P 500 index, the company UPS also shows a positive growth, stable and humble.
So, the beta analysis shows there is a volatility bigger than the market. The raw beta for UPS is 0.796. United Parcel Service Inc.'s annual return earnings increased from December 2014 to December 2015, but the decline from December 2015 from December 2016. A beta is near to 1 shows that the risk of the company is in target to the market. Therefore, the closer to the volume 1, we understand as a good investment, as shown in the value 0.796 in the UPS. When analyzing the shareholder value creation of the company, we take in consideration earnings per share, ROI, and dividend yield. The earnings per share is the amount of earnings per outstanding share of the company's stock. In calculating earnings per share, the dividends of preferred stocks need to be subtracted for the total net income first. The following earnings per shares of the 3 last years are 3.28, 5.35, and 3.87. The ROI, return on equity, is 70.39 for 2014, 210.11 for 2015, and 238.68 for 2016. The dividend yield measures how much a company pays out in dividends each year relative to its share price.
Earning per share estimate. Regarding mean, high, and low estimates and coefficients variance, there is no great variance between this quarter and next quarter. Also, there is no vary between this fiscal year and next fiscal year. After this project, we have reached the conclusion that the group would invest in UPS. Analyzing the numbers, its beta is lower than 1, and also combined with the country rating of US AAA, it becomes a promising and safe investment. However, in a portfolio, it seems a safe and promising investment. On a solo investment, the group would go otherwise.